Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a massive week. We've got so much to get through. Bitcoin is hovering right around 20,000. The markets are all over the place and there is a lot of news that's affecting the whole spectrum of those assets that we cover. So we'll cover all the local news, the macro outlook, tie it all together. Bitcoin has infiltrated its way into those traditional markets. So as always, there's a lot of overlap. I suggest you watch the whole video. And we always timestamp all the segments down below if you give the team a few hours. Now, we do welcome plenty of new subscribers again this week. One of my favorite ever interviews was with Lynn Alden. So that's got 22,000 already. I highly recommend you check that out. We really spoke about the way that a lot of smart individuals like Lynn have come to the fray and the realization that Bitcoin is probably going to a multi-trillion-dollar market cap and that journey there. Now, a lot of people don't really take things seriously when it's a guy on YouTube called Nugget, for example, that is saying these things and predicting these things for many years. But now we've got world's leading economists, politicians. It is just crazy in the mix of people that are flipping bullish on Bitcoin and those assets, as well as how much the macro backdrop has really changed. I just wanted to mention our platform as well. All the research is going there. The feedback you guys have given us is just absolutely fantastic. You're loving the layout. So each week these days, you're getting new reports, whether it's on crypto, daily snapshots for those of you that are busy, the headline analysis, our research reports. We want to build this out and have the #1 crypto research library in the world. So we're going to continue to scale. Some people have been asking about jobs, so we've just hired 2 more people, but keep an eye on our LinkedIn because we don't really advertise it publicly because we already get hundreds of applications from just one post on LinkedIn, so we don't want thousands. Other thing I'll just mention quickly, it is really great that the markets are moving and we can apply everything we've learned. Super proud of those 1,000 or more members. There's 5,000 now, but 1,000 of you that have been with us since crypto winter. To hear these kind of stories and to hear about how it's all paying off. And I think last week I did this write-up about the reasons that I just don't quite see the market playing out the way that everyone was expecting, and to get messages from some members saying that they've paid off their whole yearly membership in a matter of minutes from just applying those few little things that we can learn is absolutely awesome. So if you're new, head over, grab the cheat sheet checklist, stick to that in a bull market, and there's not a lot that can really go wrong. I also want to mention the launch party that we're doing. So some people are still a little bit confused about all this. In Decentraland, we are going to launch our new building. It's going to look a little bit like that from the outside. It's going to be a community area, so it's going to be free for everyone to use. We're going to have meetups, education. You'll be able to head in there and virtually watch all the tutorials and talk to people, have professional business meetings, screenings of documentaries and the like. So that's all possible, but we are having a paid launch party. So that's limited to 100 tickets. Half of those are sold out already. Now, I know that's not everyone's cup of tea, but some people do enjoy having that exclusive little get-together and asking questions and whatnot. So hopefully that all makes sense now. If you're in the group, or I'll put the link down below as well for everything you need, the instructions if you do want to grab a ticket for one of those. Okay, let's get into the local news where Tassie has declared itself 100% renewable. So I've just closed out of that, sorry. But someone was saying that's a little bit misleading in terms of the renewable power, but Tassie actually does get a lot of their renewables from hydro. So better than a lot of other states out there. And look, I think our whole country should be aiming to get 100% renewable. There's no excuse with the amount of sun and wind and everything that the country gets, as well as our technology. So another positive story that I want to start off with here, and that was really about the cash ban. It's dead and buried for the time being. Now, I'm sure that they're going to have another crack at getting this in, but considering the backdrop of COVID, perfect excuse to ban cash. I'm really proud of the way that our audience, Martin, John Adams, Robbie Barwick and those guys, all of Australia really stood up and made a lot of noise to stop this. And I think that just shows you that people are realizing the power of social media and that they can have a voice and stop these things happening. So that's something that I'm really proud of, because that sets a precedent for us to make noise if they try to, ban crypto in the future, ban gold and silver, whatever it is. We can really change things. So that's great. One thing that we also need to change is the ASX. So they've had these ongoing outages. It's meant to have been upgraded to a blockchain technology, but that's been pushed back a couple of years now. And these options traders have been burnt. So can you imagine having big positions on as a fund or even just an individual trader, and the markets are down and you're just watching the markets move against you, and you can't open or close these positions. You might get a margin call. So I'm going to be interested to see what they do there. In the crypto world, when the exchange kind of stuffs up and it's their fault, they often repay the customers. So, hey, maybe all these decentralized DeFi options and derivatives trading platforms they're up 24/7. Yes, they have their issues at the moment, but they're the sort of technologies which are going to get to the point in the next 12 months that they're going to be better than these systems. They don't go down. They run 24/7. So I think we're going to see big global stock exchanges actually integrate, Ethereum and these other technologies as the protocol that they build on top of. Just like we've started to see banks and payment companies integrate that as well. And we've got some big news to get through later in the show about that. Another thing, a dog's breakfast, as it's been referred to here, very Aussie. Our surveillance laws could see spies getting greater access to smartphones. So an experienced campaigner in the field here has come out and said that we just have not got our systems up to scratch. And particularly when you consider we're part of the Five Eyes Alliance. So rather than, fix the systems and the issues, they're saying that we need to just give people greater access. So look, unless you've been living under a rock, you should know that every text message, phone call, email, bit of data, thing that you do online is now recorded. It's put into an algorithm. You're categorized as, a high-risk person, low-risk person, a crypto investor. So guys, you have to get knowledge. And we have these educational units on our website. How do you maintain privacy? And that's just not to that's not to do anything dodgy. That is just for your own protection, because we're constantly seeing data leaks and hacks where people get your personal information. And then it's almost too late. People know where you live, know your emails and passwords. So you have to have good online hygiene these days and know how to protect yourself and all your personal data. Alrighty, so speaking of all this data, and these are things that should have come out but didn't, immature, reactive, and inadequate. This is APRA slamming Westpac's risk culture. So the Royal Commission, everything that it revealed, all those changes that should have been enforced, it just hasn't really happened. And there's still this culture there, I think, in the banking system. So thankfully, we've still got some people saying that we need to get these lending laws back into line. We need to do what Commissioner Haynes said. It's just unbelievable that we've gone down this other route of saying, let's scrap the responsible lending laws. Let's try and get the housing market reinflated because it'll get the economy going. And the thing is that will work in the short term and it will play out that way. So the RBA, they've got the interest rates down. They're promising they're going to stay there for years. Don't even think about rate rises. That's what they want people to make their decisions off. QE is staying at this pace of $100 billion over the next few months, and the recovery is better than expected. So with all that happening, compared to the past 20 years, things are actually going fairly well now, and yet we're printing all this money and interest rates are at record low levels. These are the things that you're meant to save for when you're in a recession and it looks like a depression, there's no recovery in sight. We're in the position, and so is the global economy, where it looks like the worst is behind us now, especially in Australia. We should let natural forces lead the recovery, because we don't want to go into another global downturn and we're already at zero. We're pumping out $100 billion when everything should be reopening and people should be spending more. And that's what we are seeing in the data. And Philip Lowe, who's normally pretty conservative, he's going out there and saying it's a good time for first home buyers. He should not be telling them, encouraging people to make these sort of financial decisions. Telling first home buyers that it's a good time to go and buy when house prices are going to be back at $1 million in Melbourne and Sydney very shortly. Basically encouraging people to go into that sort of debt. Now, consumer spending has bounced back, and that's great to see. All the Aussies want to go out and have their avocado on toast at the local cafe, and go to the local pub and have a beer, palmy, support people that own local businesses. That's the Australian way: support local, spend local. So it's no surprise that we've got that built up in demand. Everyone's busting to get out and spend. That's awesome. So, these are the sort of countermeasures that I'd argue that we don't need to have rates at 0% and be printing hundreds of billions of dollars, because that is just going to drive this housing bubble. So loans for construction are booming, in part because of the home builder scheme, which initially had that slow update. Remember when people were a little bit, I think, hesitant about it to commit, or it was just slow to maybe process those. So the number of loans to owner occupiers has jumped 11%. In October, beating September's record from the numbers that we've seen. But I think this is absolutely what's happened in the US that I just despise, and it's happening in Australia. And I'm just so shocked that Philip Lowe, of all people, has gone down this path. So they're trying to convey this message that property will never go down. They will never let the market go down, as in free markets don't get to decide the price of housing. And this is what they want young people, first home buyers, thinking. So house prices are on track for record highs by February, like I just mentioned before. And if they get to that point, and we're seeing this kind of 10% annual growth like we've seen in the past with easy money conditions, does that mean that, if you're trying to buy a house next year, it's going to be 1.1, and then the following year it's going to be 1.2 million? So how are young people meant to save and even keep pace with that $100,000 a year cost in house prices? And even if you're only trying to save 10% of that, it's an extra 10 grand that you need to try and save each year to even afford that little down payment. It's just so out of whack when our wage growth is zero, and it's just all to do with this money growth. So this is Australia's M1 money supply. You can see how steeply, it's up 30%, 40%, just in this year alone. But it's the percentage of growth, which is the scary thing. So this is a 45-year high. This year in Australia, we've had, it says here it's around 20%. This might be measuring something different from M0. It might be measuring M1 or M2. But this is just enormous, the amount of money. Same in America, 20% more currency in 1 year. It should not surprise you when stocks and housing and these assets are going up in price this much, because that's where the money's pushed straight into those assets, and it's not into our wages and those increases there. Now, when you look at these numbers, over the past decade, the Aussie economy has expanded around 2% a year. It's pretty low by historical standards, but look at where we are now with COVID, and real GDP per capita even lower again. And that's because we've taken out the one or two things that were really boosting our economy. So real GDP is probably negative by a lot of measures. And this is the population growth that we relied so heavily on, steadily around 1.5% for decades now, compared to the rest of the world, where it's almost twice as high in Australia, where we've got that benefit of population growth. So, Steve Keen and I in those interviews, plenty of people have been warning that we're going down the same path as Japan. Go back and watch the interview we did with Steve Keen 2 years ago called Turning Japanese. They've been doing the money printing, the low rates, and they've now found themselves in this bind where it's not working. But what have they done this week? Well, they've proposed, the new Prime Minister is proposing that we just haven't been printing enough money. So we just need to print $2 trillion this time and things will get better. And the banks are hurting so much that they actually need to have a different interest rate for the regional banks, because the negative interest rates are killing them. So they're going to have one interest rate for them, another interest rate for everyone else. Now we're going to be printing trillions of dollars. The central bank's going to buy all the bonds. None of this makes any sense. It hasn't worked for 30 years, but that's what they're doing. And the Bank of England saying, negative interest rates not likely. That was only 6 months ago, I think. And sure enough, here we are. conversation around negative interest rates is ongoing, and there is modest scope to cut further if needed. Rate cuts and QEs the best approach. So this is just the mindset of central bankers. And I think Australia, if the US goes negative, Australia is going to have negative interest rates as well. Now, finally, Australia's joined the race to try and maybe head down this path of meeting our goals for getting towards. I know people hate this word, climate change, and net zero carbon emissions and whatnot, but I don't think it's about any of that really. I think it's just about modern technology and doing things better if we can. The technology in terms of solar and that has come such a long way in the past 10 years or so. But I think Australia is more just under pressure now because other countries that are forward-thinking and innovative, they're proactive instead of reactive. New Zealand have voted and they're going to declare an emergency and they're going to go after this really hard. This is what I think most countries are going to do. Over the next 5 years, big spending programs, getting rid of coal, boils, getting electric cars. Now, I know electric cars don't solve much depending on where the power comes from when you plug them in, but look, I just think that this is really smart. I want to see new things. I want to see change. I don't want to see us doing the same thing as always, because definitely when you look at the likes of China that are now punishing coal, and we're trying to, well, it's one of our main exports, and China are now saying, hey, we're going to partner up with Indonesia. We're really being hurt because all those things that China used to buy off us one by one, either tariffs or just scrapping them and looking elsewhere because they're just not happy with us. I think they've really taken it personally when Scott Morrison asked for that independent investigation. But ScoMo was pretty angry this week after that tweet went out, a fake image slurring Australian soldiers on social media. China have kind of not even apologised for that. They've almost doubled down on that. How did things get this bad this quickly? Now, in Australia, a lot of the Chinese media is still controlled by the Chinese writers and whatnot. So now we're hearing this talk about propaganda in Australian newspapers, telling Australian warships not to enter those Chinese coastal waters, or there will be you have to swallow the bitter pills. Now, the US is getting involved here. They're going to be sending permanently forces over to help patrol Australian waters. Talk about a rock and a hard place. But I think, as always, it's the average person that just gets hurt by all this. So if you ask the middle-class Chinese citizens, they probably still love the Chinese wine and all our products. I don't think they hate it just because of what's going on at the moment. It's the same in Australia. It's the middle class, it's the farmers. Look at all the wine producers that are getting smashed this week, pardon the pun, because people aren't going to pay that same premium. Maybe wine they sold for $30 is only going to be able to fetch $10 now because there's going to be a flood of supply here, local markets. Yeah, we're trying to sign these deals with everyone else, but some things are really hard to replace. There is an alternate way forward for Australia and China if we can have some mature conversations, but some of the suggestions we've had this week are way out there. So there's talk about going in on this all-out trade war and how it would actually boost Australian GDP. Pauline Hanson and One Nation are talking about Australia to boycott all the Chinese products. I don't think two wrongs make a right, or anyway. Chinese factories are expanding at their fastest ever pace, so things are going okay over there. But the US is banning cotton imports from China. So tit for tat, Trump also going after all the tech that we've seen, the chip makers. Now the oil giants are on the blacklist, apparently related to military. Now, Donald Trump is out for 4 years, but he's talking about maybe making a comeback. So, hey, it's all the rage, I think, to get elected in your 70s and maybe 80s these days. So, hey, do you think Trump will have another term? I know Putin stood down for 4 years because it's essential to do. You have to do that in Russia, but then he did come back. But I'm not sure if Trump will get back in. All right, so in terms of the recovery, the market's really pumped because of the vaccine, but I said be cautious. These things are a lot harder in reality to do than what we're being told. And sure enough, we've had these supply chain obstacles, and Pfizer are talking about pushing back that target for how they're going to be able to produce the number and transport them all. Now, we're hearing that Moderna's vaccine was created in just 2 days. So there's never been a vaccine for a coronavirus before. And now all of a sudden one's created in 2 days. So make of that what you will. But I think we are hearing in Australia that there is going to be some precautionary measures taken to ensure it does meet all those standards, because there's a lot of concerns in places like the UK where they have pushed it through really rapidly. And now, look, the media are going to say, and they've deployed even the army here to handle the anti-vaxxer propaganda and these protests. But if something's been created in a couple of days and it's been rushed through legislation in a week and we're just going to start pumping into millions of people, should we be a little bit cautious? And there's doctors that are saying this as well. It's not just the tinfoil hats. So I just really worry that it's this black or white stance from our leaders. It's either yes or no. You're either a conspiracy theorist if you're concerned, that we're going to come after you online, you're not allowed to protest. Concerning stuff that I think is going to get worse. Now, there are also some positives. We've had some giant leaps in AI. This week we heard that China have got a quantum computer that's better than anything in the US as well. So let's see if that's actually the case. Some things have changed forever. Warner Brothers are releasing their entire suite of movies at once on HBO Max next year. So for those of you that want to binge watch some movies, you're going to get a year's worth at once. That is pretty cool. But think about all the cinemas that is taking money away from. So it's just these business models that are changing, and it's the software online business model that is capturing the majority of spending these days. In the US, we're still hearing very mixed messages about this stimulus. So millions of people are hurting. There's talk now that they're far apart on any unemployment benefits and stimulus proposals, because heading into Christmas, you want people to have money. It is going to be miserable for them to be that time of year and not be able to afford things and be kicked out of their home, whatever it is, healthcare. And then on the same week, a couple of days later, we're hearing that this $900 billion aid is very, very close to happening. Look, it's not the 2 or 3 trillion that they need. Every month that goes on, it's probably a bigger figure that we need just to get back to break even as well. So the jobless data came with a little bit of a caveat. We did hear that unemployment had ticked down to, I think its lowest level was at 6.7%. But under the hood, if you do look at the jobs that were created, it was far lower than the estimates or what we had in October. Some of the job gains were concentrated in warehousing, professional and business services, but it was the retail jobs that were falling in holiday season, when we'd probably be expecting towards the end of the year things to ramp up, particularly when people have been in lockdown. And as always, it's the emergency measures, the coronavirus wages that people are falling onto that skews this data a little bit as well. If you actually look at what's going on in the US, they've got record number of COVID, hospitalizations. The death count's right up there again. I'm not too concerned about the number of cases because we're doing such wide testing. But we are hearing that some of those hospitals are overrun again. If that happens, the US economy is probably in for a bit of a shock compared to the rest of the world if they can recover. And I also think that puts big credence in what I've been saying about the metabolic component. So many people we had a high rate in New York, for example. Think about the obesity, the diabetes, autoimmune disease, just chronic health conditions. Those are sort of things where I think the viral load puts strain on your immune system. Their immune system can't fight it off. They are more likely to end up becoming COVID patients. The health workers on the front line, maybe they're run down, maybe they're stressed, maybe they just have a high viral load. I think we've got 2 very clear explanations now on why those types of people, the high case numbers that we're seeing, as well as the elderly, the picture is all starting to make sense now. And I don't think there is a need to be in a full-on lockdown. But hey, that's just me. Okay, so corporate America's cash burn problem is getting worse. All these high-yield companies, cheap financing, allowed them to avoid bankruptcy for sure, but they've kicked the can down the road. Now it's time to pay that back. And a lot of the banks don't want to keep lending to some of these companies like the oil and gas, the shale producers, because they think they might be going bust. This red hot stock rally has been powered by a lot of these companies, the zombie companies. Do we have the data here? The number of zombie companies, I think it's getting up towards like 20%. And when you think about how likely these companies are to pay down the debt, the yields are just so out of whack. And interest rates are starting to rise on the US government bonds now. We're starting to get hints of inflation. And yet junk bonds are just at this record low level. So 4.6% for a junk bond to take all that risk when we're starting to see hints of inflation. The US 10-year yield got back up to 1%. So that is a market that's in a lot of trouble. If people head for the exits, the Fed are going to have to buy out trillions and trillions of dollars of those bonds. Now, the bull market rotation away from tech-driven stocks into these mega companies, I think we've also seen very clearly that, remember how we've been talking about all this sentiment? Oil and gas is dead, and sure enough, it's those companies that are just so unloved that you can almost do a contrarian trade on. Talk of peak oil was coming up again. Everyone was talking about the green revolution, ESG. So oil and gas stocks have rebounded really, really strongly of late. ExxonMobil up 23% for the month, best month since 1972. They're the sort of headlines that you love seeing as a contrarian. Now, Paul Tudor Jones is amongst many people that have come out and said there's going to be this massive boom once the vaccine gets released. I don't think it's to do with the vaccine. I just think it's the built-up demand. And this is why people are now speculating. The stock market is forward-looking. 464 companies were taking part in this rally of the S&P 500. Now, that was very different to these other months when it was just the big five, the FANG stocks, really taking the concentration of that wealth and leading things higher. Now, the worry is if they don't hit these profits and earnings, these multiples are just absolutely ridiculous. 50. This is the US market cap of the stocks versus the GDP. So the US is becoming a smaller and smaller segment of global GDP. This is why we're starting to see all the problems in the euro-dollar system and calls for new reserve currency. A huge problem for stocks and bonds if we get any of this inflation that central banks are now welcoming. Just like we spoke about, imagine if we get 5% inflation and junk bonds were priced at 4.6%. That is just, the bond market is a $100 trillion bond market. And by trying to get inflation higher, there's $100 trillion that might run for the exits. Think about all that the central banks are going to have to mop up. And yes, they quote this 2% figure, as our friend Gabor tweeted this week. But this is the inflation, the true inflation, the unadjusted, the cost of living. First half of 2020, 13%, 12%, 11%. These are really, really high figures that everyday people will tell you that's how much the cost of living is going up. Weekly flows into these US funds. This is buying inflation protection securities as they're classed here. So a huge, huge jump. People are looking to protect against inflation. Now, insiders are continuing to sell a lot of stock here. This is the smart money indicator. Very similar sort of numbers and metrics here. Is this a record? Fastest pace in 4 years, insiders are now selling their shares with the stocks have just hit record highs on all the major indexes in the US. Record-shattering flows into all these stock ETFs, leaving bond funds in the dust. $81 billion poured into ETFs in just November alone. So this is all this speculation and euphoria with the smart money selling into this rally. Put to call ratio, another record here. So many people are buying calls, and they're just all about the upside. It's the momentum. It's the tech stocks. It's the the Robin Hood accounts. Literally, small traders here who used to normally account for less than 10% of all buying those call options, so betting the market's going to go up. They're now responsible for 22% of all these new positions. So markets have got a vertical look to them. They're at record highs. And what we're seeing here is the biggest bubble of all time. Insane amounts of retail investors betting the market is going to go up when the market is parabolic. And this is all responsible of, and I don't blame Robinhood and those people necessarily, but they have made it very easy. They've gamified investing. Now, some companies have even had to dive into the options world to offset the risk and balance their delta. So SoftBank has said they're actually going to start winding down all these options bets because it's had investor fallout. It's really straining the way the market's meant to work. Options have now become bigger than stocks, and options are a derivative on the stock market. So it's just such a dangerous position that we've got ourselves in there that it's about to unwind. Now, everyone's going after big tech. Global leaders do agree on that. This is something we've been warning about. Big tech were 25%, 22%, I think it was, of the market cap of some of these big indexes. Visa wants to buy Plaid just so they can get all this bank transaction data of millions of people, and the Department of Justice are suing them over that. So this is, big tech data, privacy, payments. So much money has been extracted from the average Joes, and all that is about to change. 970% pump on a stock, not a crypto. These are credit card tricks and other misinformation on TikTok. So just like we saw day trader Dave, he's built up this huge following. We're now seeing like TikTok, the little app, if you're a little bit older or you're not familiar what it is, this has become all the rage. TikTok investing. And this, to me, another huge sign we're in a bubble. But I also think that a lot of those TikTok investors are probably going to jump over and start trading crypto. So I started trading hot stocks on Robinhood, and I couldn't stop. So this is people saying that they were skeptical, but the way that the apps work, they get the bells and whistles, the lights and the sounds. It's the dopamine. Everything's been going up, so people have been making money. They think it's easy. That's the worst possible introduction to investing. You need the market to really hit you hard and have a bit of a reality check and get that humility to become a good investor. And those other, I keep talking about this, market stabilizing mechanisms are just out the window. This is Tesla stock price compared to the short interest. So where are we here? This is going into 2020, 20% of stock was short, and that's been just absolutely squeezed down to 5%. So there's still a lot of people that are short Tesla, but you've been absolutely punished for being a bear or for trying to short any stocks. And a lot of time, they're smart people that do a lot of research, and maybe they are too book smart, because you got to be street smart. Times have changed. You can't fight the Fed. If they're going to print trillions of dollars and just buy up stocks when they go down, like we've seen in Japan and other countries, it doesn't really matter even if the bubble pops. They're just going to end up owning everything. Special purpose acquisition companies are the hottest investment. So people investing in businesses and ideas. This is almost like ICOs. $60 billion this year, more than the previous 10 years combined. People are writing blank checks. They're that desperate to invest in anything. How insane is that? That would be crazy in the crypto world, in the ICO world. But this is the traditional market. And a lot of the time it's accredited investors that are still desperate to give away their money, invest in anything. So this is an awesome article by Lynn. Very, very long one if you love your reading. But the US financial system is fraying for those reasons that we've outlined. Behind all these market breaking, new all-time highs, there's always another Fed little milestone. Copper, a lot of these commodities are now inflating as well, the reflation trade. And I think I spoke about the fact that central banks want this. They will welcome a bubble. They would rather have gold and copper and oil and gas. Even I think the cryptos, Tesla, all those stocks, they'd rather have them at record highs and be a little bit frothy and bubbly for those companies to make money, for individual investors to make money. That's a lot easier to handle than a crash and COVID. Okay, they are going to have all sorts of trouble on their hands if that happens. And so I almost think that they're playing a little bit dumb here. Their balance sheets have jumped $10 trillion or so, but I think they would welcome it at another 10 trillion higher if it meant not having civil unrest, not having huge unemployment. And that's kind of my thesis at the moment. So it's all just one big make-believe economy, but it's here to stay until something changes. I don't think they're going to unwind this. They've never been able to, and they're not going to default. So that's the path forward. QE is just going to get bigger and bigger. There's another toxic cloud behind all this. Even with the recovery, the pensions are still unfunded. So central banks kind of need stocks to grow at 10 or 12%. Not even 8% is going to cut it anymore. And they've got to find a way to get that growth, but keep everyone happy. But because the inequality is the thing that a lot of people didn't see coming, whether it's in their economics textbooks or government. Now, just this week, we've seen more violence in France. A couple of reasons here. So some of this was about the pushback against protests and police violence and whatnot. They want to be able to protest after all those yellow vest movements, but they've also been setting the central bank on fire. Now, I don't think US citizens have quite connected the dots yet, and they don't know where to point their anger. But in a number of countries we've seen the citizens go and burn down banks and central banks, and they kind of know that it's the financial system that's almost at the root of a lot of this evil. Nigel Farage, if you don't know who he is, go to YouTube and check out some of the awesome clips he's done over the years. He's come out, British politician, talking about how Bitcoin is the ultimate anti-lockdown investment. So more and more people are taking the side of Bitcoin or gold, silver, whatever it is, over the big banks, over the money printer, okay? They do want to speak for the people. They don't want to protect those in the ivory towers. So let's have a look at all the global funds since 2019. A lot of money's gone into cash. A lot of money had gone into bonds and out of equities. So that's what we're seeing reverse at the moment. All that money flowing into equities, apart from the smart money that's leaving, but a lot of money leaving bonds because interest rates are, low, or even negative, and they know that inflation is on the way. Higher interest rates are on the way. But the other thing here is cash. I think, again, you want to get out of cash because you can't get a good interest rate on your term deposit. You'd rather invest it somewhere that's growing. But now it's also not just the interest rate, like MicroStrategy and those other companies are saying with their balance sheets that are going into Bitcoin. They don't want 20% more fiat currency that they're holding being printed each year, okay? And that is happening in every country around the world. So investors are saying, let's look elsewhere for the reflation trade. Let's look to emerging markets. They've had record inflows. They're going to grow really well if things start to pick up. Treasury yields have jumped, and when Treasury yields go up to 1%, that means that there's a lot of selling of the bonds. And this is where I think the Fed would step in pretty soon. They can't let rates on those treasuries get much higher than that. Physical gold, we did see a bit of selling out of those ETFs in terms of the holdings. Now, that looks pretty nasty on this chart. It's the largest outflows ever. So is this over the past 3 weeks? Yeah, we've seen 10 billion of outflows. So that's only a little tick on that chart when you consider we've got, millions and millions of dollars that has been flowing into these things recently. So one little bad month doesn't really change the trend. But some percentage of investors look at gold. They say, oh, I can't get a yield on that. Yields are going to be going up everywhere. I'm out of gold. I'm looking somewhere else. Now, in the crypto world, you actually can get a bit of a yield on your gold as well, but that's a different story. But I do think the whole debate around has the money been leaving gold to go into Bitcoin, I don't think it's a direct, one for one at all. I think it's way more nuanced than that. If we'd seen that much money leave gold to go into Bitcoin, Bitcoin would be at $100,000 already. Gold is this $10-15 trillion market cap. So money has not been leaving gold and going directly into Bitcoin. Although we have seen new money flowing into digital assets, this is going parabolic. More and more people, smart money, institutional money. So just tying all this macro together, the dollar edges higher as Brexit talks pause. So this is the fourth as we rounded out the week. The US dollar has been pretty much in free fall. But what we are continuing to see is a lot of people still on the one side of the boat. The US has got this double dip recession problem. The dollar is going down. They're going to be printing more and running huge. So they've got the twin deficit problem. Huge deficits. They've got the big debt. And they're also taking into their economy, importing way more than they're exporting in terms of that dollar value. So all of a sudden, that world reserve currency that all those investors have been happy to hold, the $100 trillion bond market that people have been happy to hold, these are the two biggest market asset classes, probably other than real estate, in the world. A lot of people have had so much money parked there, guys. And this is why I just want to keep drilling these things home. For the first time in history, that has changed. And that is why people are looking elsewhere and why Bitcoin has so much potential, because its properties, albeit very basic, those attributes make it probably the best currency in the world right now to park some money in. So yes, asset managers have been pretty bearish on the US dollar. Again, this week, you can't quite see that behind me, but it's dropped to another record level. So asset managers are record net short the US dollar. And we've actually seen a bounce recently. And I think we could get a bit of a squeeze there. I don't think this $3 trillion stimulus is coming anytime soon, which was starting to get priced in by the market. So when everyone's on one side of the boat, you look at stocks at record highs, cryptos, gold and silver's had a good run. If the dollar has a short squeeze and goes higher, all that is going to change. That is going to send markets sharply lower. That puts more pressure on the Fed to come in and say, hey, we're going to print $2-3 trillion. They've got to try and talk the US dollar down again. So that's kind of the macro backdrop thesis of how I see things playing out, or the major risk that the market isn't pricing in at the moment and where all the opportunity is for you. Okay, so top security tips, how to avoid being scammed. These are all the modules that we're continuing to add to this week because unfortunately, guys, we've just seen so much of this lately. A lot of the MetaMask phishing apps as well. People are going to the wrong version of MetaMask and putting in their private key and getting scammed that way. So please be careful. Head over to our website. Learn how to have all these best practices for online privacy and security. Our team are working very hard on these, so put them to use. Other thing I wanted to mention was for our friends in the US, we've had a good bull run this year. Some of the coins in DeFi have gone up, 10 or 100x. I just wonder how much we're going to see in terms of US tax selling. Not just because of the normal end of year, but because Biden's coming in. He's talking about taxing certain things at a higher rate. So is that going to affect you if you're in the US? If you know this stuff better than I do, are businesses more likely to take profits on some things because of the taxes that they're staring at? Even if it normally wouldn't make sense for capital gains point of view, maybe it does because of the changes that are coming. And so that is just one more thing that I'm waiting to see if it's going to affect all markets, but I think crypto markets in particular could be more fragile and at risk from those. Speaking of which, Crypto.com have acquired or secured an Australian financial services license. So they haven't got one personally. They have bought a company that had one. Now, these are very hard to get in Australia. I haven't heard of the Card Group before, so I'm going to have a look who they are. And I think they, the prepaid cards by the sound of it. But that's a big move, and interested to see what they plan on doing in Australia. And I'd love to get a hold of Crypto.com's books and have a look at how solvent they are as well. Another breach in Australia, unfortunately, was BTC Markets. So Aussie exchanges have had a pretty good track record, and unfortunately, BTC Markets has been involved in both the minor breaches we've had in the last few years. So BTC Markets customers, unfortunately, you've had your full name and email address and other details revealed. So again, you have to be on the lookout now for these scams because you're going to get targeted, just like we saw the Liquid exchange get hacked the other week, and a lot of people that are users of that have been getting these targeted emails. All right, so I also wanted to mention the Real Vision documentary. This was fantastic. 95 minutes. I think it was 7 or 8 hours of content that got squeezed down to 95-minute documentary. So look, I'm wondering if we should try and get our hands on that 7 or 8 hours of footage and maybe even put something together, a longer one, the Lord of the Rings extended version or something like that. But let me know what you guys thought about that. It was an absolute pleasure making it. I think it's been really well received. The idea is just trying to tell this story about Ethereum 2.0, how it all works, where all this stuff is going in future. All right, so one of the bad pieces of news that we did get this week was from US lawmakers talking about possibly going down this path of making all stablecoins illegal without federal approval. So what we've seen, I just don't think they really understand the way stablecoins work. They're sort of saying, well, anyone that wants to do this and peg a coin to the US dollar, you're going to need this license, blah, blah, blah. It's just so out of touch with reality. And I'm kind of glad that we got some pushback here. People trying to explain that these crypto wallets, they're not bank accounts. Don't treat them as such. I just think the education side of things in Congress is just so low compared to where it needs to be. These are the policymakers making decisions on things that they're just not informed on. So yeah, a lot of even Congress people did speak out against this bill, which was great. A lot of money got donated to Coin Center through those Gitcoin grants to make sure that we're going to fight this, which is also awesome to see. And towards the end of the week, Brian Brooks came out and said openly that nobody's going to be banning Bitcoin anytime soon. And there's possibly some good news coming out before, I think, even the end of the year that they're aiming to get that out. DeFi and ETH2 are a whole new kettle of fish for the regulators. I know they're going to have to wait and see what they think about staking, but I'm not too worried there. Christine Lagarde's continued to harp on about how stablecoins are a risk to the financial system, even though stablecoins are actually backed one for one compared to our fractionally reserved banking system. But she's very positive on central bank stablecoins. It's just everyone else doing it is a bad idea. Russia's getting on board now. Ruble or rubble. I do love that headline. You guys know I'm a bit of a sucker for a good dad joke. China are going to roll out their digital yuan in Hong Kong next, apparently. All about the data and control there with that one. Nigeria is emerging as a true Bitcoin nation. So these places where it has the most opportunity, I just love developing nations adopting Bitcoin because we're just so focused on the US in a lot of the news cycle. We've frozen up here, guys. Let's give it a second. We might have to pause and do part 2. We're still recording. We are back. Okay. So Stripe is going to offer bank accounts with the help of Goldman Sachs and Citigroup. Hasn't DeFi just really made all these payments businesses have to get on with it because they just have had it so good for 30 years. It's great to see PayPal, 20% of customers, 20% of users have used the app to trade Bitcoin in the first couple of weeks. That is an insane figure. I hope that continues at that pace. Libra have rebranded to Diem to try and shake off all those negative connotations. I just think they are so far behind now. They've relaunched with a US dollar stablecoin, but it's just one of dozens now. I just don't think Libra is going to catch on, or Diem, I should say. The big question for me here is how does XRP develop in this environment now? So they've got this Flare Network airdrop coming out. There's been a strong bounce, a lot of traders getting on board. It's broken out technically. The CTO says that Ripple, the company, could even burn all that XRP that they hold. Hey, that's going to be good. If any coin dilutes or burns 50% of the supply, that's a massive plus. So if you're an XRP holder, you want to be pushing for that to happen, absolutely. But we've also had this study this week that the Ripple protocol doesn't reach consensus. And this was a really thorough study. So I've reached out to the XRP friends of mine to see what the rebuttal is to this study. I'll be very interested to hear what they say. Probably the biggest bit of news this week and just overall in crypto, possibly of all time, or in terms of Ethereum news, Visa coming out and saying that they're adopting Ethereum, they're adopting stablecoins, USDC. Think about the systems that they could use. They've been experimenting with hard forks of Ethereum, private forks, internal networks, their own ledgers. They could have trialed whether it's the Lightning Network or XRP, whatever it is, but they have chosen Ethereum. That is a massive, massive signal to the rest of the world and payments providers. So well done, ETH. A lot of hard work is paying off. And USDC have hired a Wall Street vet as CEO because I think they're really going places now. They're going to overtake Tether, I believe, just because of there's a need for regulated US stablecoins. Now, Celsius CEO Alex has come out and spoken about Ethereum possibly losing its dominance unless it's going to scale, unless it makes a quick, smooth transition to ETH2. So I think competition's great. We've already got Ethereum Classic making these moves and hard forking to include all the GPU miners. So it's going to give all the miners somewhere to go once staking takes over as the mechanism. Solana had a bit of an outage this week. The Ethereum maxis jumped all over this, and I was pretty disappointed to read some of that stuff, to be honest. A lot of the arguments that they use against Bitcoin maximalists, they're now coming out and criticizing another network when it has a hiccup, and Ethereum has plenty of hiccups and bugs all the time. So, yeah, competition is healthy. Theta have launched their blockchain video delivery platform in beta. I know there's plenty of Theta fans out there. It looks like Spotify is looking to get into crypto payments for their audio streaming. Terraform Labs is launching Mirror Protocol for investors worldwide to get exposure to US equities. So these are synthetic versions or wrapped versions. TerraSwap is a little bit like Uniswap as well, so that's very cool. Tezos is going to get a privacy upgrade. A lot of chains are implementing privacy these days, particularly if they're going to have that corporate use case. Cardano is introducing token locking in their latest hard fork as well. So plenty of projects are really, implementing. We've gone through that research phase. It's action time. Polkadot launching this DeFi alliance with Chainlink. They're going to let 1,000 nodes blossom. Great to see. The Secret Network have built their bridge to Ethereum. We also saw the Ren virtual machine build their bridge as well. Hey, interoperability, we're better off being friends than enemies, I think. Roll-ups is obviously the counter-argument to this competition. So if Ethereum can implement optimistic roll-ups, that is the big hope for them to maintain a bit of a monopoly and that big market share lead. Yearn Finance have had half a dozen mergers and acquisitions now. So while a lot of the market has kind of gone sideways, this is almost like the new Coinbase listing. Cream, Sushi, a lot of these really pumped on the news that they were merging with Yearn Finance or Wi-Fi. It was probably one of the happier moments, I guess, for me, because I copped a lot of crap. People saying, you're a scammer for promoting sushi and whatever, because I said the project, I liked the concept and it had good fundamentals. I think people were literally making a meme about me saying it had good fundamentals. But guys, I do research, I build narratives, I share those theses with you. It's up to you what you want to do with them. But when I have conviction, I stood by it. And I kept saying that I think sushi's not dead. I think it's a good idea. And so for sushi to go from 50 cents to I think $2.50, I think it is going to be a competitor to Uniswap. They've got a lot of things coming that most people still got no idea about. Okay, so DeFi auditor receiving a death threat after a $12 million rug pull. You've got to be careful out there, guys. You should expect rug pulls if you're going to get involved in these early DeFi projects. The other thing that I did just want to mention quickly here was Nexus Mutual beginning to offer custody and cover for these centralized projects as well. So it's not just the DeFi cover they're offering, but some of the centralized lenders, which opens up their possible revenue. They've got the shield mining going here, where the project that they're partnering with also offers the tokens as well as the Nexus Mutual tokens to create strong demand and rewards and incentives for people to offer that cover and insurance. Aave have launched their version 2 of the protocol. That is going to open up things for them, and the token's been on fire. That's been our best performer of all time with an over 200x return. The amount of Ethereum that held by the top exchange, by the top 10 largest whales, has dropped from 16% to 4%. So I was quick to jump on here and say, guys, I think this is only because the big whales are moving their coins. They had to move it to deposit into the ETH2 contract. So don't worry too much there. An Ethereum fund is going to debut on the Toronto Stock Exchange. Ethereum only investors are growing according to Grayscale. People are going through this education and understanding process. Now, the Grayscale product is, it's $600 at the moment for one share, but one share doesn't equal one Ethereum. It equals 0.1 Ethereum. So I'm glad they're going to finally do this 9-for-1 split. So hopefully this gets more in line with the actual price of Ethereum, because investors are paying a huge premium and they weren't willing to doing so. That was getting a lot of people very, very upset. We've got a good piece out from Missouri talking about the 3 different aspects, that triple point asset of ETH. And yeah, the bull thesis is just being understood by more and more people at the moment. Coinbase are going to be adding their ETH2 staking rewards. We've got Binance and Huobi. So offering 20% for you to stake your ETH with them, which is super healthy. Very large, attractive yields. So I don't think it's any surprise that more people are going to be looking to accumulate some ETH and possibly stake it on the exchange if they're not comfortable with doing that themselves. But if you think about the staking interest rate that's going to be offered on ETH2, it's looking like it's going to be around 18% at the moment. Well, that's what it has been so far since the Beacon chain launched. And you just compare that to traditional interest rates, that is going to blow it out of the water. That alone is going to get a lot of people very interested in Ethereum. Go has been acquired by Genesis Block. So these guys are really going after central bank digital currencies as the platform. But hey, Genesis Block, they obviously see something there as well. To actually acquire Go, that's huge. They're a Hong Kong-based trading platform and OTC desk, a broker. So well done, OMG there. 1inch have raised $12 million, led by Pantera Capital. So this is another DeFi aggregator to get you the best price. And there's a lot of money being injected into this world at the moment, the Ethereum world, the developing world. I did mention the other night, so this is our Gitcoin grant, guys. If you can spare $1 at the moment, that is going to be matched with $22 from the pool of funds. As you can see here, a $10 donation. The pool of funds donates $58 to us. So all this goes towards getting that research bigger and better for all our episodes this year, not just the monthly Ethereum update. It's really going to be for all our research to bring you guys as many hidden gems as early as we can. Ethereum has actually flipped Bitcoin in terms of the node count, because everyone installing the new ETH2 nodes also has to run an ETH1 node, and that made Bitcoin has criticized Ethereum not being decentralized. There's now more nodes than Bitcoin. Bitmain have actually cut funding for Bitcoin developers, so they're favoring Bitcoin Cash there, playing favorites, which I don't think is a good look. But anyway, but Gemini have come out. They've launched a fund to support Bitcoin developers. There's going to be no shortage of people supporting Bitcoin developers when they need those funds. And one thing I spoke about months ago was the geopolitical war between hash rate and countries. American miners are trying to erode China's dominance, and that is continuing. Visa credit card offers Bitcoin rewards instead of miles or cash. More and more mainstream adoption here. Another $150 million Bitcoin fund. We had so many of these this week. A German fund is looking to get into crypto next year. The big family offices, Guggenheim, $5 billion macro fund looking to get into Bitcoin. Dow Jones and the S&P are launching their crypto indexes next year. Paul Tudor Jones continues to beat the drum, saying that crypto is undervalued, Bitcoin compared to gold and equities. So when you hear these statuses like Raul say that he's gone 80-20 Bitcoin and ETH, is that really irresponsible when you consider everything I said in the macro section about how overvalued stocks and bonds are if we start to get this inflation? So I don't mind that as a portfolio if you're willing to take that risk. One thing we don't want to see though is these cash settled products. So ErisX have added cash settled contracts because physically settled weren't popular. I don't like to see that. CME, these cash settled products, they've doubled down on their shorts. So these guys don't have to own Bitcoin to short Bitcoin. This is what really controls the gold and silver market, I believe. And so these guys have doubled down on their shorts on the CME, which tells you that I think they're probably going to bully the market around. Put on a huge position and then go short the market on a crypto exchange. Then you make money on your big futures contracts. Nigel Farage has become a Bitcoiner. I mentioned that before, but I want to mention it again in the crypto section. Mark Carney at the Bank of England, who said that the US dollar is no longer working as a world reserve currency last year. Him and Larry Fink, who's the CEO of BlackRock, are now talking about how Bitcoin is possibly going to evolve into this global reserve asset. So you've got people like Niall Ferguson. He's one of the most well-respected historians and writers out there. He's saying that Bitcoin is winning the COVID monetary revolution. How many more bullish theses do you need, guys? More and more mainstream articles here. I don't think it's the pandemic that brought Bitcoin mainstream. I think it's the pandemic that brought money mainstream. People are now saying, oh, I didn't realize there's trillions of dollars that get printed and that gets given to the banks and that inflation is really this. So that is what has really got people engaged, I think. Now, Bitcoin had a little bit of a retrace. Good signs are still emerging though. So at the moment, I think there's no obvious direction. I can make a very strong case that we need to have a pullback and that people are too excited and euphoric. We're heading into the holidays, tax time, a lot of these metrics, but we're also still seeing things like the percent of Bitcoins held at exchanges is going back down after it went up. So as long as that demand can continue to exceed the supply, price is going to keep going up. Now, when we look at the actual amount being bought, I think it's ItBit, if this is going to work here for me. Maybe not. Yeah, some of these volumes, this is the exchange that provides the coins and does the processing for PayPal. And there was one day here where they processed something like 4 times all the newly mined coins for Bitcoin and 10 times all the newly mined Ethereum. So PayPal alone is swallowing up all that new supply. And then we've got, Grayscale. We heard yesterday that they bought 8 times all the newly mined Bitcoin. So it's dropped off a little bit. I'm paying very close attention to that number. Let's just have a quick look at the charts though, and I'll show you just what I'm looking at, those basic levels. I think my TradingView account has just run out, so I need to renew that. I hope it's going to let me use my indicators. Okay, where are we? So on this weekly chart, I'm still just watching us hovering right below. It's whether or not we can close above here tomorrow at the weekly close is super important now for me. Because on the daily chart, yeah, we have had a bit of a chop around. This can just be a nice bull flag now. Volume's dropping off a little bit. We had seen some selling volume. Look, we have got a little bit of bearish divergence. Like I said, you can make the case either way. I've done plenty of detailed breakdowns about that during the week. But if Bitcoin is going to range, then that might give us a bit of that December, January festive season, alt season that we've seen from time to time. So that's what I'm watching at the moment. Members, I'll keep you updated. If you do want to come to that launch party, guys, those links are down below. I hope you guys have been enjoying all our free content and the new platform. Get your friends and family involved over to nuggetsnews.com.au to take advantage of all those free resources. And other than that, smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.